Can companies continue to cash in on consumers' love for luxury brands? Let's ask Scilla Huang Sun. She is head of equities at Swiss and Global Asset Management. She's normally based in Zurich. She's in London today. She's also portfolio manager of the JB Julius Baer Luxury Brands Fund, which has about $130 million under management. Great to have you, Scilla. The big question is, how much more is there to go with these stocks? Because they've already outperformed the market for many years now.
I think mid-long run, there's still a lot of potential. I mean, luxury sales growth, it's a secular trend driven by emerging markets. There are a lot of Chinese, Russian, from Latin America that actually aspire to buy Western luxury brands.
But some analysts are saying that this might be the hardest year yet for those luxury goods makers that are in China and that are depending on it to drive their sales.
China is a big factor, so if you don't believe in China, probably you just refrain from investing in luxury stocks. On our side, we believe that China will slow down, but it will still provide secular growth trend, given that Chinese will consume much more in the coming years.
But how do you justify the valuations that are higher than other sectors right now?
Luxury goods have always traded at a premium to the underlying market. Currently, it trades at a discount to its historical valuation, so it's not very expensive, not luxury prices you pay for luxury stocks.
Are they safe bets?
In the mid-long run, safer than other bets, I would say, given that there's always demand for great brands.
Well, this is the thing. Luxury is said to be recession-proof, at least some of those very top brands. Which brands do you like the most?
Right. I would say they are recession-resistant, not proof, you know,
right,
given that they are also a bit volatile. But in terms of our favorite brands, we like the good brands, strong brands like Louis Vuitton. We like Omega, which are owned by LVMH, and Swatch. We like Cartier, which is owned by Richemont. We also like, you know, Coach, Nike, Linden Sprüngli, many more.
How about some of these that aren't perhaps in that upper echelon? Coach, for example, Nike, another example,
right,
that you own.
Right. Right, Nike and Coach are not top luxury, they're affordable luxury, but for emerging market consumers, they represent premium, they are still desirable brand, and I still think that they have a lot of room to grow going forward.
Where else have we got growth other than China? What's Brazil looking like, Russia for the year ahead?
I think in general, consumers from emerging market will still show pretty much growth in the years ahead, Russian, but also Brazilian, you have Indians coming up. But I think currently the biggest growth drivers are still the Chinese.
And what about the US and Europe? Are they holding up at all?
US is surprising. So high-end in the US is doing much better than people thought. Europe is a bit of a mixed picture. You know, Germany, Switzerland, Nordic countries
right,
doing well. Southern countries a bit more difficult.
All right. Scilla Huang Sun, head of equities at Swiss and Global Asset Management and portfolio manager of the JB Luxury Brands Fund. Thanks very much.